The financial markets are inherently uncertain. Markets react to random, unexpected events, so by their very nature, they are unpredictable, at least in the short term. Equity markets in particular can fluctuate wildly. Of course, that doesn't stop market pundits making predictions about where markets are heading. And the financial media loves market forecasts, not least because of its insatiable appetite for stories. But such predictions don't bear close scrutiny. Human beings, even so-called experts, are notoriously poor at predicting short-term market movements. In reality, they're little better than guesses. In the long term, however, market returns are much more reliable. Nothing illustrates this better than the periodic table of investment returns, which was devised by Callan Associates in California. The table shows the returns for 10 different asset classes over the past 20 years. The asset classes are color-coded, so you can track them over time. Each column illustrates the returns for a particular year. The asset classes with the biggest returns are at the top, and those with the lowest at the bottom. You'll see from the mass of different colors that there are no discernible patterns. Asset classes fall in and out of favor very suddenly. However, over the long term, asset class performance tends to revert to the mean. So over the whole 20-year period, the average return for each asset class is more or less what you'd expect it to be. Yes, equity investors will inevitably have to contend with periods of extreme volatility. Perhaps for long periods, your portfolio may be worth considerably less than it once was. But as long as you resist the temptation to bail out when your fellow investors take fright, you can eventually expect to be rewarded with far higher returns than for bonds. Similarly, over time, corporate bonds will generally return more than government bonds, which in turn will produce higher returns than cash. In conclusion then, it's best to ignore short-term forecasts. Have a highly diversified portfolio, sit tight, and invest for the long term. Nobody knows what the markets will do next week, next month, or even next year. But those with a long-term view can afford to invest with confidence.